If you're wondering what's ahead for interest rates, today's podcast is for you. Again, welcome to the Michael Yardney podcast, where we help investors get clarity in the chaos of the many confused messages in the market so that they can develop the financial freedom they're looking for. Today's episode is a replay of a recent Property Insider Chat. Remember, every Monday I record a Property Insider Chat with Dr. Andrew Wilson. And we talked recently about interest rates, and because there are changed perceptions of what's ahead, many forecasts have been wrong, as you know, but the latest Reserve Bank statement has given us a bit of an indication. There's a new president overseas. Inflation's taking longer to come down than some would like. What's ahead for interest rates, for your mortgage rates? What does that mean for the housing markets? That's what we discussed today. So if you're interested in what's going to happen to the value of your property, at the end of today's show, you'll have a better idea. Let's get on with the chat with Andrew Wilson.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Well, the Reserve Bank of Australia has kept rates on hold yet again. The big question is, how much longer will it last? I guess more importantly, when will we see the first rate cut? With the local economy sending mixed messages, it seems that many economists are finding it increasingly difficult to predict the RBA's next move. In fact, they keep changing their forecasts, don't they? But it's not just the local factors in play. Overseas developments, particularly the political shifts in the United States with a newly elected president, they could have ripple effects that impact our rates here in Australia too. How will the global pressures influence the timing of rate cuts? What might it mean for our property markets and investors planning their next move? That's what I want to ask Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, in today's Property Insider Chat. Hi, Andrew.
Yes, good day, Michael. And we've had a big shift in the global, the global political scenarios with A
lot happens in a week.
Yeah, it does, with the re-election, I guess we could call it, if you could split hairs. I suppose it's not really a re-election, of Donald Trump, and he certainly was soundly re-elected. No ifs and buts about this result, and I think it has perhaps some consequences for maybe in the shorter term a stronger global economy, and but we will wait and see the outcome.
Well, there's no surprise that the Reserve Bank left rates on hold in November. You've been forecasting that for a while. In fact, your forecasts have been very steady over the year, while others seem to have vacillated and kept changing things. So it's been quite some time since the Reserve Bank raised or changed interest rates at all. But despite 13 rate rises since May 2022, the Reserve Bank hasn't achieved what it wanted. It hasn't slowed the economy as much. Now, there's no doubt that some people are suffering with the cost of living, so we don't want to underplay that. Some people are having difficulty making ends meet. But overall, Andrew, the economy is doing pretty well.
Yeah, no, really no impact at all on the macroeconomy from our interest rate increases, and dare I say, really no impact on inflation either. It's perhaps we could have left them alone, a couple of years ago, that first rise back in May 2022. But the Reserve Bank has clearly signalled it, and I think in a way it was a consolidation of the outlook in terms of certainty. And I think that the Reserve Bank statements have clearly indicated that they're not expecting a rate cut next year, and that they think that it won't be until 2026 that inflation moves into the mid-range consistently of the inflation target. Of course, it's the underlying inflation rate that the Reserve Bank focuses on. Underlying inflation is still at 3.5%, which is 1% above the rate that the Reserve Bank wants it to be, the target rate, and it says that it wants a consistent period at that around about the mid-range of 2 to 3%, which is 2.5%, and it doesn't expect that to happen until 2026. So That's not good news for those that are expecting or have been predicting lower interest rates. And it's completely logical because, it's the quarterly data set that the Reserve Bank is focusing on. It's underlying inflation, even though headline inflation has moved below 3%. And it's really, the factors that have driven headline inflation downwards, such as particularly the price of oil and electricity, are volatile elements which won't work themselves anytime soon into the underlying inflation rate. So
if we could just explain, people have heard the latest statistics saying inflation's now fallen, but the underlying inflation takes out the volatile elements, and the Reserve Bank is looking at the quarterly, not the monthly figures, and unfortunately they're quite retrospective, and they're wanting to see a significant change there. Is that correct?
Yeah, a consistent significant change. So it's not just getting a quarter where we move to within the target range, but they need to have a couple of quarters at least, I would suggest, within the target range. And we're 1% above the target range now. Having experienced a sharp fall in oil, which has driven the headline rate down. And, we'd really need to see sharp falls in the, I guess, more mainstream elements of the basket of goods that the ABS measure for the inflation rate to sort of move consistently within that, the underlying target range. And I'm not sure why those sort of forecasting near-term cuts in interest rate have sort of missed that. But it is a delicious headline, of course, interest rates to fall. It gets you plenty of attention, so why not run with that? And you can always change your forecasts. I mean, are there anyone better than the banks at changes in forecasts? It changes with the wind from their perspective. But I did notice that the banks have actually cut their deposit rates, their one-year deposit rates, which is a signal that they're concerned perhaps that interest rates will fall, so they don't want to get caught at the margin with having a higher interest rate than the official rate. So they've sort of got in early. So if we don't get a cut as they're predicting over the next 12 months, will they increase their deposit rates to make up for that? But it's a bit of a mess, I think, to some degree, what the banks are doing.
Well, after the last Reserve Bank meeting, all the four big banks in Australia are now suggesting interest rates are going to start falling in February, and some are suggesting 3, others 4, and 1 5 interest rate cuts over time. But what I'm hearing from you is February's much too early for interest rates to start falling.
These are ridiculous estimations, ridiculous forecasts, Michael. We've seen these sort of forecasts before from banks. And we're not going to get the next inflation data out, the quarterly inflation data out, until just before the February meeting. That will be the December quarter data. We're at 3.5%, Michael. So even if we got a catastrophic collapse down to 2.5%, it wouldn't match what the Reserve Bank is telling us, and that's a consistent period at 2.5%. So we'd have to have at least the March quarter data also coming in at 2.5% to meet the clear conditions of the Reserve Bank, which is a consistent period of 2.5%, before they would consider cutting interest rates. And I think it's cloud cuckoo land to expect a full 1% fall in underlying inflation over the next quarter. That would represent a catastrophic collapse in the price, particularly of goods and services.
Well, to have such a fall, we'd probably need to fall into a form of recession, and unemployment would have to go up and people would have to stop spending. I can't see that happening at this time of the year before Christmas, can you?
No way, Michael. And of course, we've still got a booming economy. It's, the figures don't lie. I mean, we have just over a 4% unemployment rate, record participation rate. We've created hundreds of thousands of jobs over the past year. We're still creating tens of thousands of jobs every month. And the number of unemployed is also falling. So this is a very strong economy. What would make it collapse? Well, who can tell? We need some sort of a global catastrophe, I would suggest, for that to occur. But as I say, I think what we're saying is clearly logical. There's nothing, this isn't an opinion. It's just based on what the RBA have been telling us consistently. To their credit, and it gives us clear guidelines to what the outlook is. And at the end of the day, it's the RBA that will set the rates, not the banks, thankfully. But I'm not sure, how they're missing, why they're missing these sort of fundamental pronouncements by the Reserve Bank, which are quite clear. And I'd suggest perhaps the banks have a bit of a read of the statements coming out of the RBA. Maybe they're not bothering to read them. I'm not sure what's going on here.
Yeah, no one really knows what's going to happen to the United States with President-elect Donald Trump. But a lot of suggestion is his policies are going to be inflationary in the United States and therefore affect other parts of the world, Andrew.
Well, can only mean growth, can't it, Michael? I mean, if it's inflationary, it means that demand's pushing ahead of supply. So that'll only, create demand for more labour, or in already, strong, basically overall strong economies in terms of labour markets. We've already seen early signs of the sort of the positive sentiment that Trump has generated in terms of strong gains in the stock market. But, as I said, the future remains unknown in terms of those outcomes. But if it was inflationary, it could only mean more demand and less supply, which, is an issue for, it's certainly a positive for the labour market. But maybe there's an issue there for interest rates going forward. But this is all speculation. The media got it wrong again with Trump in the US. They're so discredited.
Why did they get it wrong?
Again, and they're ducking for cover now. But there are too many vested interests in the media in America, and they don't care it looks like they don't care how they present their vested interests. I'm not sure. We haven't heard much from the pollsters, who were so wrong it was embarrassing, and they were all the polls were consistent to show it was going to be a tight election. Nobody knew who was going to win. It was line ball. It wouldn't be decided for weeks. All these types of pronouncements, and yet Trump won by nearly 100 delegates in the which is 300 plus to Kamala Harris's 200 plus, and that was a resounding defeat by any measure. He also won the popular vote, which is very difficult when you have big states, or the biggest states such as New York and California, clearly, voting strongly for Democrats as they usually do. So, again, I guess it's a theme we continue, and unfortunately, it seems to be down and down and down in terms of the credibility of the media, and just another example of this. So, as I said, despite all the doom and gloom and the predictions of negativity in terms of the prospects for Trump's presidency, we'll just have to wait and see, won't we, Michael? So, but as I said, if it is inflationary, it'll only mean more growth, which is positive news for the labour market, at least. Maybe not for interest rates, but as I said, let's not get too far ahead of ourselves at this stage.
Well, the other thing that we keep regularly keeping an eye on in these weekly Property Insider chats are home loans, because they're a leading indicator. People go to the bank, get their pre-approvals, get loans, and that tells us it's one of the factors that tells us what's ahead for our housing markets. What are the latest home loan statistics shown, Andrew?
Well, this is the monthly data for September, Michael. As we mentioned last month, the ABS has decided to stop running the monthly data set, which is a bit of a shame. But I do think they've been having, and they've clearly, been upfront about this, some problems with the data coming through, which they get from the banks, basically. And so they've decided to go with a quarterly data set from next year. It is a very handy data set because it correlates quite strongly with what happens particularly in prices, house prices. But we've seen a steadying of what was quite strong growth in home loans over the past year. No surprise, because, of course, home loans measure the value of home lending, and that is also reflective of higher prices, which we know we've been getting for the last 2 years. So obviously that's going to rise. So we have to offset the value of home lending with higher prices, but we have seen a steadying over September compared to August, and I think we've seen that with some of the growth in housing markets as well, but still well ahead of a year ago, the value of home lending. But still not up to where it was at the peak at the end of that rebound period following our borders opening up. So yeah, steady result overall. We saw just a 3% fall. A marginal fall in total lending. When we look at the breakdowns, it was again pretty even across all the buyer types. Owner-occupiers were up marginally by 0.42%. Investors were down marginally by 1.01%. First-home buyers down by 3.3%. But when we look in terms of buyer types of the year-to-date versus the same period last year and also the full-year results, we can see how investors have been very, very strong in terms of home lending. Investors are up 30.1% this year to date compared to the same period last year, and over the full year up by 26.3%. So it's been a big market for lending for investors, Michael. No surprise there that higher prices, higher rents and consolidating yields have attracted investors into the marketplace over the past year, and that's clearly reflected in the data. And when we break down the data into the performance of the various states, no surprise that the states that are leading, with the capital cities are leading in terms of prices growth, have had the most lending: Queensland, South Australia and Western Australia over this year to date, following compared to the same period last year. Western Australia home lending up 38% this year so far.
Wow.
Last year, Queensland up 33.6%, South Australia up 27.5%, New South Wales up 16%, and Victoria, the underperformer, they're up by 5.9%. So, as we mentioned, there's an inflation effect there that's occurring, but it generally coincides quite clearly with what we're seeing with house price growth or home price growth in those capital cities of those states, Michael. So, as I said, it's a good correlating measure, the home loan data, compared to the other measures of housing market performance, such as prices. And when we break it down into owner-occupiers versus investors in each of the states, we can see that same pattern, that investors have really surged in the big three markets. We've seen the strongest price growth in capital cities, which of course Adelaide, Perth and Brisbane. South Australia has home lending for investors up 57.4% so far this year. That's a big rise. Western Australia up 50% and Queensland up 49.8%. So again, correlating with what we know what's happening in capital city markets, but no surprise that there are plenty of investors active in those strong markets of Brisbane, Perth and Adelaide, reflecting prices growth and rental growth, as we said.
Well, we'll be back each week to report the property and economic news in general and the auction results each week. And I know that you have them on LinkedIn every Saturday night around 6 p.m. and every Sunday morning we feature them in Property Update in a much more detailed report.
Thank you, Michael.
Thanks, Andrew. Before I get on with the next segment of today's show, my popular mindset message, I want to remind you that apart from this particular podcast, the Michael Yardney podcast that I publish every Tuesday and Thursday, every Wednesday, Simon Kirstenmacher and I bring out the Demographics Decoded podcast. And if you're a property investor in business, an entrepreneur, you really need to understand the trends that are going to shape our future, the demographic trends that are going to shape our future. So wherever you're listening to this podcast or watching, look out for, well, actually stop for a second, go to find Demographics Decoded and follow that as well. Now, again, before I have my mindset message with you, I'd just like to remind you that my discussion with Andrew Wilson suggested that there are going to be very different conditions in 2025 than there are this year. The property market's definitely going to continue growing, but not all properties will increase at the same level. Well, they haven't for the last couple of years, have they? And if you're like many investors at the moment, you're probably struggling. You're wondering, is it the right time? Should I buy? Should I hold? Should I sell? Should I just see when interest rates are going to fall? by the way, you're not alone. A lot of the clients we see at Metropole, they're suffering in some ways from information overload. All the news about the economy, inflation, interest rates, the housing market. Sometimes they've got too many options, not enough clarity. Boy, are you getting all these options and opinions on social media at the moment. You know what they say about opinions. They're like belly buttons. Everyone's got one, but in general, they're useless. I know a lot of investors are fearing making the wrong mistake, the wrong move. They can't afford to get it wrong. And others just don't have a clear plan. They're not really sure where they're heading. So what's the solution? Why not have a chat with one of the experienced wealth strategists at Metropole so we can put together a strategic property plan for you? You'll find that we're much more than just buyer's agents. We actually help our clients safely grow, protect, and pass on their wealth through strategic property and wealth advice. And when you've got a strategic plan, it'll help you define your goals, assess whether they're realistic, track your progress. It'll help you maximize your wealth creation, but also identify and mitigate risks. So why not go to metropole.com.au? I'll leave a link in the show notes and have an obligation-free chat with one of our wealth strategists to help make 2025 your best year ever in property.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Hi, in today's mindset message, I'm going to ask you, does your situation need to change? Or maybe it's just your outlook that needs to change. Look, I recently came across a story that I heard many years ago, but I wanted to share it with you. The story went a bit like this. There were two salesmen sent by a shoe manufacturer into a rural part of India to assess the market potential. The first salesman reported back, "There's no potential here, nobody wears shoes." The second salesman reported back, "There's massive potential here, nobody wears shoes." The facts are identical, yet their interpretations couldn't have been more different. One saw a dead end and the other saw a world of opportunity. Now, this story is a simple yet profound reminder. While we may not have control over the situation we're placed in, we always have control of how we choose to view it. Look, let's face it, life's unpredictable and full of surprises, many of which we should never come. At some point, you're going to be thrown into chaos. Look, maybe the sudden loss of a loved one that leaves a hole in your heart, a job loss that turns your financial world upside down. It could be a health challenge that saps your energy or affects somebody close to you. Relationship struggles that shake your foundation, or maybe there's a financial investment that you've made that just isn't working out the way you'd like it to. Let's be blunt, these are situations you can't avoid. They're part of the human experience. But here's the liberating truth. While you can't control the events, you do have absolute control over your outlook. When life seems to be spiraling out of control, you have a choice. You can fixate on what's going wrong, or you can pause, take a deep breath, and look for the silver lining, even if it's hard to see at first. Many years ago, I learned the concept of having a useful belief from the motivational speaker, Chris Helder. This was a very different way of overcoming life's challenges. It actually turns the to be positive industry upside down with a fresh approach. Chris Helder acknowledged that sometimes bad things happen to good people, and the last thing you want to hear is be positive. Instead, what he thought you should be doing is have a strategy to dig yourself out, and his strategy was to look for a useful belief about the bad situation rather than just trying to think positive. Now, learning this shaped the way, shifted really the way I learned to solve problems. Sometimes the shift you need isn't your circumstances, but how you perceive it. That's my message to you today. It's about embracing the power of perspective. So when faced with adversity, the question you should ask yourself isn't, hey, why is this happening to me? But rather, how can I view it differently? What can I learn from this? What useful belief can I take out of this? This mindset shift can differentiate between feeling stuck and discovering new possibilities. I've found that the most resilient people aren't the ones who never face challenges. They're the ones who've learned that sometimes changing your outlook is far more powerful than trying to change your circumstances. To understand that while you may not have control of the storms that life brings you, you can always choose how you navigate them. So next time you feel overwhelmed, remember, sometimes the change you're looking for doesn't come from fixing your external world. It comes from shifting the way you see it. A new perspective might be just the breakthrough you need. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.